Typically, June, July is the time frame where the metals are making an important low before the summer. And then into August, September, you often get like this midsummer rally where the metals usually are pretty strong. So from that perspective, early June, yeah, it could still continue. And you can see like silver is chopping around sideways, not getting anything going here right now. And that's typically for here, like the pre-summer kind of slow, choppy markets. I think we have to be patient with silver, right? As I said before, silver usually joins late and then it joins full force. But once it has done its move, it will take some time. And so I want to see gold marching higher and then silver starting to follow again. And we are not there yet. So I think the next party in silver will take some time.
Gold and silver markets are entering a critical summer window, and Florian Grummes, a respected precious metals analyst, believes patience may be the key before the next major move begins. Gold has already gone through a healthy correction after a massive multi-year rally, while silver is still digesting its explosive move from last year into January. The important point is that the long-term gold bull market remains intact. Gold recently tested its 200-day moving average and bounced strongly, showing that buyers are still defending key levels. In the short term, gold could push back toward $4,730, and if momentum improves during the summer rally, a move back toward $5,000 is possible. Silver, however, may need more time. After its sharp rally near $90 and a strong 26% May move, silver pulled back quickly. The next big silver rally may come later, once gold starts leading again, and silver follows with force. For investors watching gold, silver, inflation, central banks, and precious metals, this summer could be a major turning point. We're about to dive into highlights from Florian Grummes' interview. Before we begin, make sure to subscribe to the channel and enable notifications so you never miss our latest insights on gold, silver, the economy, and financial markets. Thank you and enjoy the video.
Yeah, the problem with silver is that it has not tested its 200-day moving average at all. So we had this massive, super strong, beautiful rally and rise in the silver price. Just from April last year until end of January this year, it went up 330% in just 8 or 9 months. I mean, that's been a heck of a move. And as we know, usually silver comes late to the party. When it shows up, it goes totally nuts, takes over the party for a while, and then the party's over. And that's where we are right now. We're facing the aftermath of this party, and silver has not tested its 200-day moving average. And typically, if you get a rally and a spike like this we have seen in silver, it usually the markets come back to this important moving average at least once or twice, like gold did now. So you can see this is trading around the 666-ish, I think.
Yep.
The 200-day moving average. So that would still be something that I would like to see. I mean, this average is rising higher every day. So it doesn't have to be new lows below that low at 61 from March. But going forward into the next few months, I would say at least silver should tag that moving average to like have a strong fundament where it can stand on. It was also very tricky, this little sharp rally in May, where silver went up, nearly to $90, and then immediately came back down hard. Seasonality-wise, May and June are not the best months for the metals. And if you get a rally in May in silver, and it was a strong rally, usually that is very questionable, and usually you don't want to believe into that rally. And I think it was exactly that. It came back hard within just 2 or 3 days.
26% rally in the month of May.
Yeah, and then it gave back basically all the profits, right? So typically, June, July is the time frame where the metals are making an important low before the summer. And then into August, September, you often get like this midsummer rally where the metals usually are pretty strong. So from that perspective, early June, yeah, it could still continue. And you can see like silver is chopping around sideways, not getting anything going here right now. And that's typically for here, like the pre-summer kind of slow, choppy markets. I think we have to be patient with silver, right? As I said before, silver usually joins late and then it joins full force. But once it has done its move, it will take some time. And so I want to see gold marching higher and then silver starting to follow again. And we are not there yet. So I think the next party in silver will take some time. A healthy liquidity position right now. I don't feel I need to chase the markets here at the moment. Like I already said before, I think the whole stock market setup looks very unhealthy or at least very unstable. I'm not shorting the markets, okay, but I don't trust this whole rally anymore. I think it's a bubble in my opinion, especially the semiconductor. Went completely nuts. And if this turns around, it can create havoc in all markets. And at the same time, I think most of the oil and gas reserves in Europe are now getting empty or close to getting empty. In Asia, they are already empty. I think everywhere in the world you see high level of uncertainty, less business activity, economies are under pressure. This is not the type of setup where I need to be aggressively positioned for the markets. And then, as I also said already before, summer, you want to enjoy the time with your family or your friends at the beach and take it a little bit easier. That's what many other investors and also the institutional guys are doing. In terms of like, if they have holiday, they definitely reduce their volumes in their trading desks. And so until I would say September, October, there's no need to be aggressively chasing moves here. I know that many people don't like to hear that, and they all feel the pressure of I need to make a return on my money immediately, and we're losing purchasing power by the day, which is all true. But at the same time, the most money is being made by waiting and doing nothing and let the market come to you. And if we're going to see lower prices in the stock markets and in precious metals, and you get a good entry down the road, I think it will pay off much more than now chasing little moves here. I'm actually still bullish on oil. So I think a big move is coming in oil. So I'm still holding on to my oil stocks. I'm surprised that, this is a bull market. Yes, we've been consolidating. I think it's kind of a triangle consolidation here. A big move is coming in the oil market. As you can see, it's very, very difficult to get any solution here or any real breakthrough in the negotiations between America, Iran, and Israel. One day it's all good and happy, and the next day it's all disaster and panic again. This is still a bullish setup. If this breaks out above this, yeah, exactly, more like this, that's where I see the triangle. If it breaks out, currently we're at this triangle support, more or less. If it can hold here and maybe then break out above this 100 and something kind of level, 102-ish, then we quickly should run towards 120 and then 150 in oil. From a sentiment perspective, nobody likes the rally in oil, of course. Everybody hates it. It's a clear bullish setup for me, and an uptrend which is hated is usually the best setup you can find in the markets. So I'm still believing that we're going to see higher oil prices most likely. I understand that there's lots of different opinions on it, but I think the simple fact that we have physical shortages in many parts of the world, while the price that you and I are looking at here is basically a paper market price in America, which doesn't really reflect reality. Once it's really about, I need the oil now, I pay whatever it costs, you're going to see even those electronic markets spiking higher. So I'm still bullish on oil. I think that's still the most interesting setup here.
The silver market remains choppy, but that does not mean the bull market is over. Silver often joins late in a precious metals cycle, but when it finally moves, it can move with extreme speed. That is why the current pause may be frustrating, but also important. The key concern is that silver has not properly tested its 200-day moving average after such a powerful rally. A healthy reset could give the market a stronger base before the next breakout. Seasonally, June and July are often weaker months for gold and silver, while August and September can bring stronger upside momentum. Gold also remains important for silver's next move. If gold continues marching higher toward $4,730 and potentially $5,000, Silver could begin to follow again. Let's get back to the interview.
We are now 4 months into that correction. It was a necessary and healthy correction, I believe. We have seen a second test of the 200-day moving average just last week, 4,360-ish, I think it was. So that's good. That was what I was waiting for and hoping for. Basically, get a second test of that important moving average. Important because so many people look at it. So that gives the whole thing a little bit more stability. And we immediately have seen a nice bounce last Thursday and Friday. I think gold immediately came back up to 4,590. So nearly 200 and something dollar bounce within just 1.5 days. But overall, we are still in this corrective, choppy, sideways kind of situation. It's difficult. We have not seen like these two sharp sell-offs from early February, and then in March we haven't seen that again. You can see that the trading range is getting smaller. The market is calming down a little bit. You still can have 10, 20, $30 moves within a few minutes, given maybe a tweet from Donald Trump or other news. But overall, the price action is compressing, right? And that's a good sign. I think looking in the short term, I'm definitely more optimistic here. I think we can get a bounce back up towards the 50-day moving average, maybe 4,730-ish, maybe even over the summer months back up to 5,000. But I'm not sure if we're really done with that correction already. If you put that together with the other markets, the intermarket relationships are always important as well. And I'm a bit worried looking at the stock market going completely parabolic, and then couple this with the still very challenging situation in the energy and oil markets. There is obviously no solution on the table with the whole Iran crisis here. So if these stock markets, and especially the semiconductor index, if they roll over and pull back 10, 20, 30%, liquidity could disappear rather quickly, and that probably will also affect the metal prices. So that's the only real worry that I have currently, but it's a significant one. So I'm still reluctant to call the end of the whole correction here, but I think gold should see at least an ongoing bounce over the next few days and weeks here. Maybe even during a summer rally, we could see $5,000 again. But I think it will take a little bit longer here overall. And again, we need to see how the stock markets continue to act here. Don't forget, early June now, sell in May and go away is already on. So usually the summer months are not the best period of time for the markets in general, and especially for the stock markets, and that also affects precious metals. So I'm a little bit cautious still here. I've been very cautious the last 4 months. I think a very healthy liquidity position is still necessary here. Even though you might miss some moves here and there, I don't feel the need to be aggressively positioned back. I think in the big picture, there is no doubt about that this secular bull market is intact. We are in a healthy correction. It was necessary. Gold had run up more than 250% over 3.5 years. It's totally normal to correct that move, to digest it. The Chinese central bank, as far as I know, continues to buy. We have seen the Russians also selling something that at least was in news 2 weeks ago, maybe. You mentioned Turkey already. We also know that, especially here in the Middle East, some of the GCC countries might have issues. They need money, they need liquidity. The UAE had a swap agreement with the US, but it could be that some of those GCC countries need more liquidity to keep their economies running, and hence maybe they have to liquidate some of their gold positions. That might still be something of a bit of a pressure here on the sell side. But I think going forward in the big picture, moving away from the US dollar is still the most important goal for many of these central banks, especially in the global south or in emerging markets. And I think this story will continue. Again, healthy breather right now, but I'm pretty sure that somewhere between $3,500 and $4,000, you will see many central banks coming back into the market and buy gold.
The bigger picture is still bullish for precious metals. Gold's correction looks healthy after rising more than 250% over the last several years, and this type of consolidation can prepare the market for the next leg higher. Central bank buying remains one of the strongest long-term supports for gold, especially if prices pull back into the $3,500 to $4,000 range, where major buyers may step back in aggressively. Silver still needs patience, but the setup remains powerful. After a huge 330% move in just 8 or 9 months, the market is now cooling down. That kind of pause is normal after an extreme rally. Once silver builds a stronger base and gold resumes leadership, silver could return with full force. The risk to watch is liquidity. If stock markets or major technology sectors roll over sharply, metals could feel short-term pressure. But structurally, the gold and silver bull market remains alive. For anyone following gold price predictions, silver price forecasts, central bank gold buying, inflation, and the next precious metals breakout, this is a market to watch closely. We'd love to hear your perspective on the ideas shared in this interview. Leave a comment below and join the conversation. If you enjoyed this video and found value in the analysis, please like, subscribe, and click the notification bell to stay updated with future content. Thank you for watching, and we'll see you in the next video.